Hi, welcome in. Appreciate you guys coming to today's webinar. We'll get started in just a couple minutes. Just going to give everyone some time to kind of filter in and get settled. If you guys want to just put in the chat where you're joining the call from and what you do for work, like your business type, that would be great. We'll get to know you a little bit. Welcome, welcome. Hi, Tiffany from St. Louis. David, San Antonio, Texas. Awesome. Hi, guys. Okay, looks like we got people all over. I see California, Florida, North Carolina. Awesome. Miami, Florida. You're not too far away from me. I'm in Vero Beach, Florida. Awesome. Just gonna give probably one more minute to let everybody filter in. Got another California, another New York. Awesome. So happy that you guys were able to join. Oh, Cocoa Beach. That's literally right down the road from where I grew up. The Kennedy Space Center. All right. Perfect. So I think we are at a pretty good point to get started. So my name is Elizabeth, just so you guys know a little bit about me. I am a tax professional. I'm an enrolled agent. So my credentials are through the IRS. I've been with Collective for 2.5 years now. And before this, I worked for a long time in tax resolution. So I helped individuals that mostly were small business owners that owed a liability. I helped them negotiate a fair and equitable case resolution. So something like a installment agreement, like payment plan or a settlement. So I have a lot of passion for working with small business owners and helping them along the way. It's nice to be on the other side of things, helping people put preventative measures in place so they don't have to hire somebody like me to argue for them. All right. So what is Collective? We're actually the first all-in-one formation tax and bookkeeping solution designed for self-employed individuals. And I apologize. I should have stated before I got going that we will have some time for questions and answers at the end. So if you do have any questions, you can just go ahead and type them into the Q&A box rather than the chat, just so we don't miss anything. And Sarah will send a replay of the webinar out to you guys. So yeah, basically we are an all-in-one platform for your financial needs when you're self-employed. So let's start with talking over some self-employed federal tax basics. What type of taxes do you pay when you're self-employed? So there's obviously income tax, which everybody has to pay. And that is generally what first pops into your mind when you hear people talking about their taxes. It's usually related to income tax. That's where the tax bracket comes into play as well. So individuals typically pay between 0% and 37% in terms of income tax. Most of us are going to be somewhere between 20%, and 37%. Income tax is not a flat rate. Each chunk of money you earn is taxed at a different rate. And then there's an additional layer of taxation, which is self-employment tax. Self-employment tax is a flat rate, and that's 15.3%. Self-employment tax goes towards Social Security and Medicare tax. So it's those FICA taxes that if you've ever been a W-2 employee, we've all seen that dreaded FICA on our pay stubs, taking all of our money. When you are an employee, half of those FICA taxes are paid by you and half are paid by your employer. So you pay 7.65% rather than the 15.3% when you are an employee. If you're self-employed, you have to pay the whole enchilada because you have no benevolent employer to help you out with those. So they can get pretty brutal, and that is really the main reason why self-employed taxes are so painful and expensive. So this shows $15,000 owed in Social Security and Medicare taxes when you're an employee versus self-employed. So like we just discussed, when you're an employee, you're only paying half. So you're paying $7,500 rather than the entire $1,500. All right. So how does it work? When you are a business owner, you take your total revenue, which is the money that you earn from running your business. So your goods or services that you're getting paid for, minus any tax deduction. So any business expenses, that arrives at your net income. If your net income is positive, then you're earning a profit. If your net income is negative, then it's considered a loss. Then your profit or loss flows through to your tax return. So your individual tax return. Your business profits are subject to the self-employment tax at 15.3%. And then your business profits plus any other income. So let's say, you file joint with your spouse, it takes into consideration their income. If this business is a side hustle and you have a W-2 job, it takes into consideration that income as well, minus any personal adjustments, standard deductions, or if you choose to itemize, then you arrive at your income tax, which again is somewhere between 0 and 37%. So what exactly is an S Corp and how would an S Corp change things? So first, let's talk about legal structures really quickly. And by legal structure, I really mean when you hear all of those acronyms like an LLC or a C Corp or an LLP or a GP. They are a formal process of organizing your business in your state as a separate entity from yourself. LLCs and corporations are examples of legal structures. If you don't have a legal structure set up, so if you haven't gone to your Secretary of State and registered your business, you are considered a sole proprietor. An S Corp is a tax election. So they are not a legal structure. They only exist in the tax realm. The IRS decides how each business structure is taxed by default. So the default tax treatment for a single member LLC is just being taxed as a sole proprietor. A single member LLC is what's considered to, in the eyes of the IRS, it's called a disregarded entity. And it's exactly like it sounds. It sounds a little mean, but the IRS basically just disregards that you have your LLC, that you have an entity, and they continue to tax you as an individual unless you ask otherwise. And one of those other ways you can be taxed is an S Corp, which we obviously very much love here at Collective. They are our specialty. So one of the main benefits of an S Corp is you can save some money on your taxes. They are just a more efficient tax status for you than being taxed as an individual. However, an S Corp, like I stated, it's just an election. So it does have to be anchored to a legal structure like an LLC. So you can't just have a sole proprietorship and decide to file an S Corp election. You have to have that legal entity like an LLC in place before you can elect to have that entity taxed as an S Corp. So let's go through some of the basics of S Corp taxation. S Corp owners don't pay self-employment tax on their business profits, which is huge. That is one of the main benefits of becoming an S Corp. It's just more efficient for you. So instead of having all of your income being subject to those 2 layers of taxation we talked about earlier, only part of your income is subject to 2 layers of taxation. And we can break that down in a little bit further. The S Corp election creates an employee-employer relationship between you and your business. So since you technically become an employee of your own business, the IRS requires that you are reasonably compensated for the work that you do for the business through a formal payroll. Your salary becomes an expense of the business. Your employee wages that you pay yourself on your reasonable salary are subject to payroll tax, and payroll tax is the same thing as self-employment tax. It's the FICA contributions. It just has a different name, but it's still that flat rate of 15.3%. Half of the payroll taxes are going to be withheld from your formal payroll, and half are an expense for the S Corp. Because remember, we've got that employer-employee relationship going now. So let's take a look at S Corp taxation, just like we looked previously at sole proprietorship / LLC taxation. So again, we've got the revenue, which is the money that our business is making from our goods and services. You've got the salary and you've got the expenses. The salary does include the payroll taxes of 15.3%. So it's your revenue minus your salary, including part of the payroll taxes and minus your business expenses. You then arrive at your business profit or loss. That amount, the profit or loss, and the salary flow through to your tax return, so your personal tax return. And then that income that flows through, plus any other income, like we talked about, filing joint with a spouse, W-2 income, gets reflected on the tax return minus any personal adjustments if you take the standard deduction or you do itemized deductions. So it's a bit different from how it works with the sole proprietorship taxation. Obviously, the big part is going to be the reasonable salary. That is not a factor when you are a single member LLC or a sole proprietor. So if you just think about it, like we talked about before, with a single member LLC or sole prop, all of your income is subject to 2 layers of taxation. It's all subject to income tax. at your ordinary income tax rate, and it's all subject to self-employment tax. With the S Corp, your reasonable salary is the only portion that's subject to those two layers of taxation. So your reasonable salary is still subject to income tax and payroll tax at 15.3%. The remaining business profit that is not part of your reasonable salary is no longer subject to that 15.3% in self-employment tax. It's only subject to one layer of taxation, which is income tax. So this, I think, will help kind of put it in perspective, having some numbers we can look at. So in this chart, the column on the left here is somebody being taxed as a sole proprietor or single member LLC. And the column on the right is the same business if it were to be taxed as an S Corp instead. Everything is the same in terms of what the businesses are profiting. The difference is coming into play with the wages / reasonable salary. The sole prop or single member LLC just is not set up to pay themselves a reasonable wage and receive any tax benefits. So they are having to pay their self-employment / payroll tax at 15.3% on their entire net profit of $160K. Whereas the S Corp owner can pay themselves a reasonable wage of $60K. Now that's all they have to pay this 15.3% on now. Instead of having to pay it on their entire net, now they just have to pay it on their reasonable salary. So instead of having to pay over $24,000 in self-employment tax, they're only having to pay $9,000. So they're able to save over $15K just from switching to an S Corp. And remember, as we talked before, the entire profit is still subject to income tax. It's just, we get to mitigate this self-employment tax, which can be pretty major if you look at this example. So hopefully that helps clarify things. If you guys do have questions on that, please ask, and we'll talk about it in the Q&A. So as far as reasonable compensation goes, what is it? How is it calculated? There really is no formula, no set standard for reasonable compensation. It is what is considered a facts and circumstances argument. So I always urge everyone, even if you don't go with collective, please have a tax professional help you calculate reasonable salary, because it is such a gray area with the IRS. They've been arguing about it in court since the 1940s. Of course, they can't make up their mind about it. But essentially, have a professional help you. There's a lot of factors that go into calculating it, and your salary is a tax strategy. The goal is to get your salary into like a sweet spot where you're striking a balance between having optimal tax savings, but also being in compliance with the IRS's rules. So we want to make sure, that you would have good defensibility if the IRS were to ever take a look at your business, where you're paying yourself a reasonable amount, but also having some money back in your pocket as well. What do S Corp owners need to do? So with an S Corp, one of the main differences beyond payroll, like the official payroll, is that you have a separate tax return for your business that is due every year. That business return is due a month before your personal return is due, because the business information is needed to complete the personal return. So you have an extra tax return requirement that you need to file. Now it's just an informational return. So there's not going to be any type of corporate income tax that's due with that return, but it is a requirement. And then you also because you're on payroll now, need to file quarterly payroll returns. You need to make sure, just like with an LLC, that you are maintaining your entity with the state, basically filing your annual report every year, just letting your state know what your business is up to and that you're still transacting business. There may be a fee that the state charges as well on an annual. Some of them charge it biannually. It depends on what state you're in, but you've got to keep up with that. You've also got to keep up with your books and tax obligations, so that business tax return needs to be filed every year. Your books need to be in really good shape, and you need to be paying taxes on a quarterly basis, those quarterly estimated taxes. Those are required anytime you're self-employed and you're going to owe more than $1,000 at the end of the year, which is very easy to do. So, should you start an S Corp? An S Corp is going to be a great business structure for people who earn more than $60,000 in self-employment profit per year. Now, that $60,000 threshold, I always like to be clear that that is not an IRS requirement. That is a collective threshold. We factor in, the cost of our support services, and $60K is really where an S Corp starts to make sense, where you start to save more than you're spending on support services. Support services are recommended with an S Corp because there's just more moving parts. It's hard to keep up with everything while running your business. You also want to make sure that you have enough cash flow to be able to make regular payroll runs. And you want to plan to remain self-employed for the foreseeable future. We usually say at least a year. If you are just kind of like in between W-2 jobs, picking up, a short, like maybe 6-7 month contract, it may not be worth the initial time investment of getting everything set up, having to run payroll, having to adhere to all these other requirements, being registered as an employer, having to file an extra tax return. If this is just a short-term project, this is typically best for people who are kind of setting up this infrastructure to make sure that they're setting themselves up for success for the future. So, are you thinking of switching to an S Corp? Let us know if you're not sure, if you think you're not ready yet, or if you're interested, if you're in. I'm going to take a sip of my water real quick while we answer the poll. All right, so this is just kind of a visual representation of what it can be like on your own without collective. You've got all these kind of little bubbles floating around, things that are on your mind constantly, like bookkeeping. How do I calculate reasonable salary? I'm an S Corp. I need to be on payroll. What payroll software do I go with? Because let me tell you, running manual payroll is never recommended. That is horrible. How do I even set up the S Corp? Like, how do I get my EIN? How do I register as an employer for a payroll account? How do I keep in compliance with the state? How do I set up a retirement account? Where do I get financial advice? How do I do my S Corp tax return? Are my books in good enough shape? There's all these pesky bubbles floating around, and none of it is cohesive. With collective, you get a much more organized, cohesive experience where we not only set up the S Corp for you, but we help with all those different moving parts in our all-in-one platform. So our platform is designed to make your life easier. We have everything in one place. That's obviously one of the major benefits of using collective is you're not having to cobble together all of these different pieces. Everything is in one place. It's a one platform experience. You don't have to go to any third-party websites. all of your support, your S Corp finances, they're all in one place. We do the setup for you. We get your EIN. We register you as an employer. We do your books on a monthly cadence. You get our proprietary bookkeeping software that we have built from the ground up, taking ideas from the best of the best accounting softwares and patterns of how our members are doing their books, so that way we could create a really customized platform for our members to use. We do your books on a monthly cadence. We give you reports every month so you can always have a really good pulse on your business's finance, so you can make those important financial decisions. Because when all of these bubbles are floating around and you have no idea how much you're bringing in and how much you're spending, it becomes really hard to make a sound financial decision. You also get support from Gusto with Collective. We partner with them for payroll, and they are one of the best payroll providers out there. You get ongoing advice from Collective regarding taxes, your S Corp finances. You get your very own account representative who's a tax professional that is there to meet with you and talk to you and support you. You can ask us for recommendations on healthcare, on retirement plans. We support what's called an accountable plan with an S Corp, which is essentially an employee reimbursement plan. That's a really cool benefit. We make sure that you're in compliance with your state. And of course, we do the S Corp tax return for you. So as you can see, it's just a lot of things that you can kind of take off of your mind, because you have peace of mind knowing that these tasks are being done by a team of professionals who are experts not only in small businesses, but experts specifically in S Corp taxation. So at Collective, we work with businesses of all different, I guess, categories. So no matter where you are in the process, if you're a sole proprietor, if you're already an LLC, or you're already an LLC being taxed as an S Corp, and you want to explore our services, as long as you're over 60K in self-employment profit, we would love to chat with you and see if you would be a good fit for our services, and vice versa. So here's what you can expect your first year at Collective. It's kind of a lot of what we just went over, but it's the LLC and S Corp formation piece. We get your EIN. We can talk to you again about retirement plans, health insurance, reasonable compensation. We get you set up in our bookkeeping platform, register you as an employer. You even have a one-on-one call with one of our fabulous onboarding accountants where they can run your first payroll with you. They explain reasonable compensation. It's a really amazing aspect. So you get to talk to, a really well-versed professional in getting all of this set up. And then we have ongoing support, like the monthly bookkeeping. We do S Corp specific accounting. Again, we support that accountable plan. We send you compliance reminders. We talk to you about any reasonable compensation adjustments that need to be made. And again, you have your financial team, including your member relationship manager, that you can message with questions or if you need any type of support or advice. And then we handle the tax return for the S Corp, that annual federal and state S Corp return. We prepare and file that for you. And then we calculate the estimated taxes and reminders. So it is a really holistic approach to everything, just making sure nothing slips through the cracks, which frankly is very easy to happen when you are busy running your business. So what is the cost of Collective for everything we just went over? We have a flat fee. So we have two options in terms of payment. You can do our monthly plan, which is just $349 per month. And you're not locked into any contracts with this option. It is an at-will monthly subscription. If you would like to pay for 12 months of service, you can save 15% with that option. So it comes out to $35.60 for the year. That option shaves off about $630 of your total membership. And you can always start off monthly and switch to annual later. So we do have flexibility there. There is no setup fee for sole proprietors. LLCs or existing S Corps are subject to a $199 one-time onboarding fee. And this does include all of the bookkeeping and payroll tools. And we are 100% a deductible business expense for you. And as a thank you for attending this webinar, and if you stuck with us this long, we have a special offer for you. You can get 1 month, so your first month, at 50% off. So it's a great introductory offer to sign up. The code is this May08W24. So if you are interested, write that down. You can scan this QR code to schedule a call to sign up with my team. And we would love to talk to you and learn more about your business and see if we'd be a good fit to support you. So thank you guys so much for attending. Let's take a look and see what questions we have. Okay. Trying to see. So we don't have a self-service platform. Our platform it's kind of a mix of like automation and human interaction and humans doing the taxes and the bookkeeping. So it looks like the Zoom update, Sarah, I can't open the Q&A box. Would you mind copying and pasting those questions into the chat for me? I don't know why it's not opening. I'm sorry. Okay, let's see. Deep D asked if I have my business set up and just need to pay taxes as an S Corp, the fee would be $200 per month. So if you do have your business set up, the fee would still be the $349 per month because it takes into consideration all of our services, our bookkeeping services that we do every month, our payroll, the softwares for both of those, and the tax return preparation every year. So it would be the $349, or if you do the annual, it breaks down to about $296. If I did not ask to be an S Corp the first month, let's see, can I do later another year anytime? So Rosalia, that really depends. If you did have an LLC set up prior to this year, Collective can backdate the S Corp election for you, either to January 1st of this year, or if you set it up in, say, February, we can go back to the LLC formation date. So the S Corp does have to be anchored to a legal structure like an LLC. So if you are a sole proprietor, unfortunately, we can't do anything to backdate that. But if you already have an LLC, please schedule a call with us so that way we can get more information on your specific situation and see how we can help you. What bookkeeping software do you use? We have our own proprietary bookkeeping software called Collective Accounting. If you go to our website, there's actually a quick little demo you can click through of Collective Accounting that can kind of give you a feel for what the platform looks like and how it works, like the different functionality. So I would recommend doing that for sure. I'm with 1-800-Accountant. How much do you differ? Hi, Marcia. So we do have several members that have transitioned from 1-800-Accountant over to Collective. We're just a little bit more I would say, comprehensive than what I've heard their services are. And I'm not sure how much their price differs from ours. I know some support services do have some kind of hidden costs. Um, with Collective, it's just a flat fee. So you'll never be charged any additional fees. Are we receiving the PDF also? Rosalia, I don't believe they send out the slide deck, but you will get a replay of the call. What if I'm starting the business and not paying a salary? So with an S Corp, you are required to pay yourself a reasonable salary. So if you are just starting your business and you're not sure about the revenue, the profit, the cash flow, like what all of that looks like, I would advise to just hold off on transitioning to an S Corp until you're sure that, you're gonna be earning above 60K in net profit per year and you have the cash flow to pay yourself a reasonable salary so you can adhere to the IRS's guidelines and requirements. Claire is asking, I got an extension on my 2023 taxes. Can I retroactively become an S Corp? So Claire, if you did have an LLC for 2023, like the entire year, you may be able to find an accountant who can do a backdated S Corp election for you back to 2023. Collective does have some boundaries in place in terms of retroactive S Corp elections because they are a lot of administrative work. There's a lot of kind of like cleanup that needs to be done in terms of your books. We've got to do a payroll catch up. So if you do join Collective before June 30th of this year, then we can backdate your S Corp to January 1st of 2024. A lot of accountants will kind of charge a pretty penny to do a retroactive S Corp election. So of course you would want to do like a cost benefit analysis to kind of see, is it worth it? Am I going to save enough versus what I would spend for somebody to do this for me? But I would just check around with accountants in your area if you are wanting to go back to 2023 and kind of shop around and see what they would charge. Carl, I'm sorry. I know I told everybody to put their questions in the Q&A, but I'm having an issue opening it. So you can just put them in the chat for now. I apologize. Is there a setup fee if I already have an LLC and S Corp tax structure set up? So typically there's a $199 onboarding fee. But you could always schedule a call, talk to one of our advisors, and they may be able to make an exception on that for you. It really just depends on what they're able to do. So I would just encourage you to schedule a call and chat with somebody. Okay. Gio is asking, can I register my business in another state, which is more tax friendly, and have a registered agent? So at Collective, we are very focused on compliance. As far as compliance states, your business should be registered in the state where you are living and working, even if all of your clients are remote and your business is online. If you're technically like working from your home or an office in your state, your business should be registered in your home state. If you do even take a look at like LegalZoom, for instance, if you read the fine print regarding registering in like Delaware, Nevada, it does say you should also register your business in your home state as well. So at Collective, we do take a simple approach to just registering your business in your home state. In most cases, it's the tax advantages don't really outweigh the hassle of registering out of state, because if you are, audited by your state and they see that you have self-employment income, but no business registered there, they can fine you. They can take you to court. You can have to pay penalties and interest, and they can eventually suspend your right to do business in your state until you register there. And then you've got essentially two LLCs you're maintaining, like one in Delaware, for instance, and one in your home state. So you have two annual reports, two annual fees. It just becomes more of a headache than it's typically worth. I already do payroll through Gusto. If I add collective, how does that work? Great question. We will just take over the billing of your existing Gusto account and roll that into your collective subscription. You would just add your accounting manager as a manager of your Gusto payroll. That way they can help. Okay, when is the latest we can sign up for an S Corp this year so our income can be deducted? So as far as collective's deadline, if you have an existing LLC, you can sign up anytime before June 30th, and they'll backdate your S Corp election to January 1st. That way, all of your income for this year can kind of be roped in under the S Corp, and you can enjoy those benefits for the full year. I want to get my LLC, but as an S Corp, can I do that from the beginning of filing? So yeah, you can set up your LLC and then do basically like an immediate S Corp election with that. I would just advise that, you're sure, again, you're going to be over 60K. So do you have like contracts or clients in place? Are you sure you're going to have the cash flow? Okay. Single member LLC, Marsha, thinking to change to an S Corp. This is something simple to do. So you can download the form. The S Corp election form is form 2553. You can download that on irs.gov and send it in. I do recommend having a tax professional help with this, just because if you do make a mistake, the IRS can reject your form. There's just a lot of, they're very nitpicky with things like this. So it's always just best practice to have a tax professional give you a hand. Okay, two adjacent commercial properties, which currently have the same single tenant. Thinking of creating an LLC for each to further limit my liability. Is this advisable? So yes, typically, and it's hard to give advice really on the properties. That's not my area of expertise, so I don't want to steer you in the wrong direction. I typically focus on more like active rather than passive income with self-employed individuals. But with properties like this, like rental properties, a lot of people that we talk to do have separate LLCs for each. You have options there in terms of if you want to have two separate S Corps or one S Corp. You can also set up a holding company where, kind of one S Corp own, like there's like one owner that owns the other LLCs. We don't do those at Collective, but you can kind of do some research and see if that would be the best structure for you. Typically for a holding company, you would want like a tax attorney to structure that for you. They are quite complicated. So yeah, you can definitely check that out. What bookkeeping software would you recommend outside of the software your company uses? So prior to building our own platform, we used Xero, Xero. That is a fabulous bookkeeping software. I've also heard really good things about FreshBooks. And a lot of our members before they joined us used waive for invoicing and had really good experiences with that as well. Can I switch from an S Corp to a sole prop from year to year? So that's a great question, Carlos. The IRS doesn't really want you to kind of switch back and forth every year. So you can revoke the S Corp election, but once you do that, you cannot re-select that entity for a 5-year period. Hi, Gio. We do collect from the Q&A, but unfortunately, I'm having a technical issue opening those, so you can just put any questions in the chat box for me. Sorry about that. Okay, and this is the question on registering the business in another state. I already answered that, so we don't do that at Collective. So in the chart where you showed the LLC versus S Corp, the amount to be subject to self-employment tax is correct. Pay taxes on your wages or on the income after wages. So let's see if we can go back to that. Okay, so there's the two different types of tax. So you pay taxes on the net profit of your business. So when you're an S Corp, you're still paying income tax on the net profit, but the self-employment / payroll tax is what really differs here. So when you're a sole prop or a single member LLC, you have to pay those self-employment / payroll taxes on your entire net versus an S Corp where you just pay payroll tax on your reasonable salary. You still do pay income tax on the entire net. The S Corp doesn't inherently impact income tax. It just helps mitigate some of the self-employment tax that you would otherwise be responsible for. In this scenario, it's about $15K. Okay. Is an S Corp a separate legal entity or just a way to tax a business? I saw you put LLC plus S Corp. I thought it was just another separate entity. Sorry for the confusion. Don't be sorry at all, Sylvia. I know this stuff it is confusing. An S Corp is just a tax status or a tax election that you can make. So it would need to be anchored to a legal entity like an LLC or a corporation. At Collective, we work with LLC based S Corp. So the LLC would be the underlying legal entity, and it would be an LLC being taxed as an S Corp. Okay, when is the latest to sign up for an LLC or S Corp for the entire year of income to be considered? Not sure how much I'll be making. Example, if I sign up in December, would my income from January be counted? So if you are a sole proprietor, your S Corp election date for your income to be counted, like roped in under the S Corp, is going to be your LLC formation date. So you can't backdate an S Corp election if you're a sole proprietor. Can an S Corp be placed in a trust? I'm not sure about that, Carlos. I don't believe so. I believe they're kind of two separate things, but that trusts are very, very complicated. They are admittedly confusing to me and not my area of expertise. Usually tax attorneys handle any types of trusts. So you could just check with a local tax attorney in your area to probably get a better answer on that. I apologize. When you have applied to S Corp election. So you can apply throughout the year. To apply for a timely filed S Corp election, you typically want to file that by March 15th of the current tax year. So we're obviously past that date. So any S Corp elections that we file from now on, we have to apply for what's called late election relief, which has to include a reasonable cause argument of why you did not file in a timely manner and why the IRS should approve that. Do you represent the company as a registered agent? This is if I don't want my address and name to be publicly available. Yes, Gio, we do provide registered agent services. Great question. Would my LLC with S Corp be sending myself a W-2? Yes, TW, it absolutely would. Great question. Thank you, Claire. I'm so glad that you came. Okay. And can you help me form my LLC with S Corp? Yes, we can. Absolutely. We do LLC formation. You can schedule a call with one of our advisors. Well, let me go back to that other page in case you need the QR code. It's right here. So you can schedule that and chat with us about the process of LLC formation and S Corp election, but we can absolutely help with that. What desktop software do you recommend? I'm not happy with cloud-based software. I would recommend Xero. How do you know if the IRS approves your S Corp 2553? Great question. They'll send you a letter. So anytime you apply for like an EIN or like the 2553, you get a letter in the mail from them, basically stating like, we approved your S Corp election. It's effective on this date, and you want to hang on to that letter. Rosalia, our services as a registered agent are included in our monthly costs. That's a great question. With Collective, we'll never charge you any other costs. We don't have any hidden fees. Everything is included in our flat rates. If I open my LLC at the end of May, when do I have to apply for S Corp elections with the IRS? So if you open your LLC at the end of May, we can just send the S Corp election for you then. You wouldn't be able to backdate it though. So keep in mind that the S Corp would be effective as of your LLC formation date. That's the furthest back you can go if you're a sole proprietor. Oh, no worries, Carl. You're typically better off, I think Gio answered above, typically better off with a separate LLC for each property for liability protection, or you can talk to a tax attorney about establishing what's called a holding company, which is like kind of like a parent company that owns other companies. That may be a good option for you. We don't handle those at Collective. They are quite complex, but a tax attorney can kind of tell you if that is a good path for you. If you are, really obviously, with owning properties, if you're concerned about your liability protection. Can you explain corporations? So yes, they are just a different legal status. Typically, corporations are going to be more advantageous for large businesses. S Corps are going to be better for like small to medium-sized businesses. The main advantages of a corporation would be if you're wanting to raise outside funding, if you want to have more than 100 shareholders, or if you want to be able to issue multiple classes of stock, like preferred stock and common stock, then a corporation may be a better option for you rather than an S Corp. All right, I think we got through all of the questions here. Thank you guys so much for attending, for sticking with us. I hope you schedule a call to just chat with us, see if we'd be a good fit to support your business. We would love to kind of get more information and learn more about your business and what you do. Our team is exceptional, so they can definitely, if Collective isn't a good fit, try to point you in the right direction otherwise. Our fee for helping form the LLC is just that $199 onboarding fee. Yeah, I understand, Carl. It's a lot. It's kind of drinking from a fire hose with all this information, but thank you guys so much again for attending. We hope to talk to you soon, and best of luck and continue Continued success to all of you with your businesses. Have a great day, everybody. Thank you so much. Bye-bye.